and welcome to BTVI. I am Balasubramanian and you are watching Market Guru. Joining us on the show today is Balasubramanian, AMC Chairman and CEO of Aditya Birla Sun Life AMC. Bala, welcome back to the show. Thanks for joining us. Straight away, let me go to your successful summit of the Mutual Funds Association annual summit. What are the key learnings and challenges that have come up given the kind of hectic growth that we have witnessed in the mutual fund industry?
This event, of course, is the one of the flagship event of the MF industry. That's why we have created this, and it was started in the last year in 2017. So repeat of that we have done this year. While the turnout was good and it was quite well attended as well as well received by most of the participants. If you have to, of course, tell you about some of the key learnings from the event, is to get more and more prominent people such as the chief of Paytm, such as Susha Thorat, who spoke on how the bond market is getting developed, and making it more relevant from the audience, not just only discussing about the MF industry alone, also how MF industries can benefit from some of the other things that is happening in the country, both from the digital front as well as on the payment side where a lot of revolution is happening. And third, of course, we could have brought in a speaker from overseas market to tell us about the emerging trend in the mutual fund industries and financial service industry, especially markets like US, could also been a better choice to have. But still, anyway, it's every event we have some new learnings. I'm sure as we progress, we would make it more and more meaningful for every participant.
Yeah. You said Paytm's Vijay Shekhar, I of course heard the speech, made some very, very interesting points on how to leverage digital. How is AMFI working on that?
So I think clearly the point what you made is right. Because in the world where everything is moving toward digitals, there is no time limit by which one should consider investments in mutual fund as they currently do any transaction. The mutual fund also provide that facility even today. If somebody wants to invest in the midnight, yes, he can invest in the midnight. Except the regulation today stipulates very clearly what is the cutoff time for taking the applications, whether it is in the liquid fund or debt fund or the equity fund. Because at the end of the day, all the investment that we get are all recognized relating to the market price, which you call it an NAV on a daily basis. Therefore, the applicability of NAV is driven by the regulation. So, but people can transact any point of time as they wish. Even on a Saturday, Sunday, they can punch in the transactions, but it will always be taken on the next working day. I think the point what you was making is very interesting from the point of view of giving the units, then that instead of waiting for the end of the day to process all these investments and all of the units, and the mutual fund industries can move towards allotting the units then and there, subject to the marginal deviation which will be linked to the NAV. Such kind of innovations can definitely be created instead of keeping the transactions in abeyance till the units are created at the midnight at the CAMS and CARVIS level, which is the R&T levels, and then issue the upon statement to the investors. I think that can definitely be addressed. This is a very good idea, very innovative, forward-thinking, innovative idea, which I am sure industry will be able to consider this as we move forward.
Right. Bala, you made a very important point, but any industry which witnesses hectic growth, of let's say the kind that we have seen in the mutual fund industry comes with its own problems. In fact, even the SEBI chairman brought about these issues: risk management of debt funds and the mis-selling of closed-ended funds. How is AMFI looking at these two key critical issues?
I think the 2 points which SEBI chairman trying to address as far as the potential risk goes. One, as he mentioned, the debt product. Debt fixed income schemes have been seeing a growth the last 3-4 years, and fixed income schemes also being considered as alternate to fixed deposit investment. Some portion of the fixed deposit investments are being considered by investors to to be invested in fixed income schemes. So in this kind of scenario, fixed income schemes also play a very important role in the development of the corporate bond market. Under this backdrop, the SEBI chairman advised to the industry is to actually take care of the risk that can potentially arise on account of investing in rated instruments which are, say, at the investment grade, which is BBB plus or A minus and A plus kind of instruments. When you take care of the potential risk default or potential default that could come from those investments, as well as the potential the downgrade could happen on those investment, which is what I think he mentioned about the risk that money manager has to do it. I think if you look at historically, money managers have been extremely careful in choosing the credit, both in terms of rating as well as the valuing those credit while underrating those bonds in the portfolio. As far as the closed-end fund concern, I think the closed-end funds again have to be looked at from the point of view of relevance, and second from the point of view of expansion, and third from the point of view of getting new customers on board, and finally from the portfolio manager's point of view, he should be able to identify stocks that can potentially be part of the portfolio, which also is there in the open-end fund portfolios. Therefore, as long as it makes a relevance, and then closed-end funds are not sold on the basis of just for raising money or just by incentivizing people without looking at the benefit of the investors, then could potentially lead to some kind of abusing of such kind of schemes from the investors' point of view, from the regulation point of view. I think this is what SEBI chairman mentioned about the closed-end funds have to be looked at from the relevance point of view, and accordingly the launches have to be made to ensure that it has some impact on investors. If it is used actually for other purposes, then it can be used. It can be seen as abusing of the power, which is what I think he wanted in that conference.
Right, I agree. Closed-ended funds should not be used just for raising money, Bala. A couple of other important issues that come to my mind. You see, AMFI has always been emphasizing and trying to push investor education and saying that, look, investors have to be educated, but it's also very important that funds are regulated in such a manner. Maybe you're an organization which can adopt self-regulation rules on controlling mis-selling. How is AMFI addressing this critical issue? Mis-selling will always drive the investors away. Your comments on that, sir?
I think there are one or two ways in which we have been addressing. One is, of course, mis-selling is actually it's a subject. One will never be able to find a solution in terms of what kind of mis-selling happens in the industry. Having said that, the way the AMFI advertisements are being designed, one is of course making people aware about investing in mutual fund, and secondly, you know about the product beforehand in terms of how those products have to be seen while making those investments from the suitability point of view, and third from the promises. I mean, the mutual funds are not subject to do not promise anything from the return point of view. This again, it's clearly highlighted. The mutual funds are subject to market risk. Though one may invest in fixed income schemes, one may invest in equity schemes. This again clearly is highlighted, and we of course do encourage most of the players actually to use this as a punchline in everything that we do. Having said that, now we are coming out with a new set of ads highlighting about the risk that has come, especially in the last 6 months to 1 year, the market volatility which got set in, especially in the mid and small car space. That's why I think we are actually is making people aware that investing in mutual fund is not for short term, it is actually for long term. So that's the kind of handholding messages are being given and driven through the AMFI advertisement.
Right, Bala. Talking about risks, let me now ask you to change your hat. Wear the hat of fund house, head of a fund house, a leading fund house. Markets have been running and hitting new highs almost every day. How does your fund house view this bull run?
Clearly, the market has been surprising by hitting the new high every alternate day. At the same time, is also a reflection of reflection of optimism, the reflection of some of the fundamental changes that we were expecting all these years, especially around GST, tax collection, increased level of compliance both in GST as well as income tax filing, as well as the recent growth that we have seen on the infrastructure building and supported by good corporate earnings have also been primarily reason for the market to go up. Having said that, I think the fundamentals of the economy is also in some sense reflect in the stock market. Unlike some of the emerging market that we have seen in the recent past have suffered due to the FIS outflow, but India actually remained somewhat unscathed in the whole process, again as a reflection of the fundamentals of the economy. Having said that, I think ultimately the market will reflect the earnings expectations as well as the direction that we are seeing as a country as a whole. On the basis of that, I would probably say that market will remain buoyant, but the levels of index maybe will take a break, but the broad market which got suffered big time in the last 6-7 months may probably give a bounce back, given the fact that the majority of the companies in that space are coming with reasonably good earnings numbers. If we are able to sustain that as we move forward, I think probably we'll see the broader market actually participating, but not so much on the Sensex and Nifty.
Yeah, right, Bala. Therefore, my next question to you, don't you think the markets are getting a little more expensive than what is perceived to be, especially in the large cap stocks?
Again, we'll have to look at it from a broad holistic basis. If you again divide the Nifty as Sensex into sector wise, there are certain sectors within the space are valuation wise costly, especially FMCG companies. We can probably say their P multiples are high, but at the same time these are some of the sectors also benefiting out of the rural income going up. They are also benefiting out of the GST, margins are showing an improvement. Therefore, it is very difficult to say that how much of the valuation concern is there in the market. But I think the way I see is the overall direction seems to be reflecting the buoyancy. So therefore, the valuation will remain, and as I always keep saying, will remain as a point of debate.
Right, I agree. After the sharp fall in mid and small caps, do you think they will stage a comeback, given that there is too much concentration in large caps?
I think clearly if you look at there is a complete shift that we saw after a very, very long time towards the large cap company part of Nifty and Sensex, and within that only about 5 to 7 stocks were the great performer and driving the whole index movement. At the same time, the kind of punishment that came due to various reasons, including the guidelines which got changed from derivatives from regulated, as well as recategorization of schemes, and many other factors were actually punishing the mid and small cap companies. I think our belief is the worst is over for that, and we'll probably see as we move forward, supported by good earnings coming back, the mid and small cap companies I think giving a good rise to the market. At the end of the day, market cannot be determined by only 4 or 5 stocks. As long as we as a country see actually the widespread growth coming from every part of the country, therefore mid and small cap companies have to deliver in the long term.
Right. Money keeps coming in month after month, and the market keeps rising. It's a challenge for fund managers, isn't it? Large caps have become expensive, mid caps and small caps, the markets are not really sure of. Will you and your fund house remain in cash and buy on dips in this kind of a market?
See, one of the learning that we have in the last many number of years of being in the fund management is to stay invested at all point of time is the principle that we apply. And within that there has to be a very high focus on stock specific that can actually give a better performance over the indices. Though in the last 3 months have been very tough for money managers to have large stakes in 1 or 2 companies which have been the primary driver of the index, which is known fact to everyone, where the marginal underweight on those stocks have led to underperformance in the scheme performance with respect to the index. But having said that, course correction the money managers do it and keep looking for the best alternate opportunity that can potentially outperform the broad market, which is purely on the basis of stock specific approach, and that continues. And cash call generally we don't take unless until a scenario becomes extremely negative, therefore one has to take that call. But mostly staying invested, keeping very high focus on allocation of the sectors as well as the stocks that can potentially outperform the market is a strategy which is generally applied, which makes me feel confident that longer term this strategy does work well because it worked in the past as well.
Okay, see, in the current market scenario, there are two themes which are playing out rather excessively, I would say. Financial services and consumption themes are the two themes which every investor, every fund manager tends to chase. Do you think investors are going overboard on these two sectors?
So I think both the theme, I think if you take the consumption theme, it has got one, of course, consumption. Secondly, they also needs money, which is for the spending purpose. Therefore, the financial service industries plays a very key role both the segment of the market, which is both in the infrastructure development in the form of financing, as well as the consumer sentiment again in the form of financing. Therefore, the financial service industry will remain one of the biggest industry, given the fact it touches every customer needs in the country. At the same time, financial service industries also helps in terms of generating not just only the wealth, is also money being made available for the people who are in need, and therefore help the economy to grow. So globally also the financial service industry is one of the biggest industry and the service sectors, and India also will continue to remain a dominant sector. And given the fact that India's in terms of penetration per households, if we take the borrowing that they have, India is the least among the global economy. So therefore, there is still a long way to go in terms of increasing the penetration of the financial service industry to every household in the country, and therefore this will remain a dominant sector for the index.
Right. Bala, when there is continuous steady inflow of money in the markets, markets tend to chase the same set of stocks, but they also tend to look at stocks which have been in oversold zone for a long time. Pharma is an example. Last 2-3 months, fund managers, investors have been chasing pharma stock. Is it worth chasing pharma stocks at this stage?
So again, pharma is a sector, it's a one, the balance sheets are strong, and the valuation is anyway a function of earnings. At the same time, they are also driven by some of the global development, both from the exports point of view as well as the foreign companies operating in India. They also step up the focus given the market potential that they see in India. So the pharma as the sectors have done pretty well, where there is no uncertainty of FDAs. I think there is FDA's approach also being started coming for some of those companies. On the base of all those things, definitely the sectors one cannot ignore, and the sector actually has got a long-term potential to give to generate shareholders value. Valuations of course keep changing depending upon the earnings, but otherwise the sectors can definitely, sectors one should have in the portfolio. That's what we as a fund will have in the part of portfolio. But only the question is, the index has got a weight of about 3%. Correct. Then how much of the weight will have in the pharma sector in the portfolio? Given the fact that any deviation, significant deviation of the index may also lead to either outperformance or underperformance, therefore one has to play it carefully. And money managers keep it anywhere between 6 to 7% as a result of that.
Bala, see, ever since the budget introduced long-term capital gains, dividend is already taxed. Many companies are using buyback as a route to rewarding shareholders, and even large companies like L&T have resorted to this. How does your fund house look at this? Do you also participate in buybacks?
See, buyback is one way of rewarding shareholders in the form of using the cash in the absence of not able to find enough opportunities for generating the ROE. I think buyback would give a better way of reflecting that there are no opportunities, at the same time have a lot of cash which is eating into the ROE of the company, and therefore I am giving back to the shareholders in the form of buyback. Which is again leading to share reductions, will increase the EPS and therefore improving the ROE of the company. So it's actually good decisions. Globally, most of the companies, successful companies, in the absence of any opportunities to be found, they do actually adopt this route of buyback. And we actually welcome this, and we also been as the shareholders, not necessarily we actually surrender all the shares during the buyback time, unless the buyback price actually substantially higher than current market price. Sometimes we do of course hold on to this investment, keeping in mind the expected improvement earnings will actually give me a better price discovery as we move forward. And whatever trend that we have seen, is actually in the good directions, which again reflects the balance sheet strength, and we appreciate that.
Right, Bala, in a market which rallies, uninterrupted, the rally has been uninterrupted, do you think caution is required? What are the headwinds that can come in the way of this rally?
I think there are 3-4 headwinds which can go against the market, which of course one is the oil price, which is now settled down, but there is still a feeling that it can give a spike. And second is, so far interest rates remained stable. The recent monsoon, while it is good, it also has got a potential of impact in the agriculture output. Therefore, the food inflation could also be under threat. And which that happens, then RBI can look at increasing the rates beyond the 20 basis points which already been factored in. And third, of course, is the trade war that US, the president has created, also has got a potential of creating a risk in the global volatility. And finally, is the currency movement. And India has got current account deficit, which currently under control. But if it touches 2.5 and if it becomes another issue because of the import going up, it can actually potentially create some kind of uncertainty for the broad market. Election, of course, we still have a long time to go, but I think macro variables which have been the primary driver of India, I think have been out of tune for the last 3-4 months. If it remains that way, then potentially we could have the macro headwind going against the market rally.
Right, Bala, one last question before I let you go. What's your message for retail investors?
I think clearly it's something which is constant message I keep giving is any investment is made in the mutual funds or in the any companies is meant for long term and is come with some kind of purpose. Therefore, stick to the purpose, keep the convictions on for long term investing. Therefore, whatever the market fluctuation comes that in the recent path that we have seen should not decide the decisions otherwise of moving away from investing. And staying invested is a constant message that I keep giving all the time.
Right, Bala, thank you so much for joining us and sharing your expert thoughts. I think with that, it's a wrap on this edition of Market Guru. More news and updates coming up on the other side of the break. Stay tuned to BTVI.